Imagine waking up to see 40% of your net worth evaporate in weeks. The $120,000 dream turned into a $60,000 nightmare overnight. Wall Street is in a panic, and the average investor is backed into a corner. What happened to the promise of the currency of the future? Bitcoin isn't just falling, it is being systematically dismantled. After hitting historic highs, gravity has finally collected its debt. This crash wasn't an accident, but a coordinated strike by global forces. We are witnessing the largest liquidation in recent crypto history. The epicenter of this earthquake goes by the name of Kevin Warsh. New pick for the Federal Reserve has completely changed the game. His hawkish stance signals the end of the era of easy money. High interest rates mean that risk now carries too high a price. Opportunity cost has become an insurmountable barrier for many. Why bet on volatility when US Treasuries are paying more? Institutional capital is fleeing toward the safety of the dollar, and Bitcoin, without the Fed support, has begun its freefall. Liquidity, which once flowed like oil, has simply dried up. The same ETFs that fueled the rally are now accelerating the ruin. Billions of dollars exited BlackRock's IBIT and Fidelity's FBTC. When giants rush for the exit, the door becomes far too small. Institutions are no longer buying the dip like they used to. They are liquidating positions to cover losses in other sectors. Michael Saylor's MicroStrategy saw its shares plummet by 80%. The model of infinite leverage has finally hit its brutal limit. The tech market, risk's twin brother, is also in full retreat. With big tech pulling back, the appetite for speculative assets is gone. Investors prefer cash or gold, which rose while BTC bled out. The digital gold narrative was tested, and this time it failed. US foreign policy is adding more fuel to this raging fire. Imminent regulatory changes bring a heavy cloud of uncertainty. The government that promised to be pro-crypto is now tightening the net. Trust, the invisible pillar of Bitcoin, is seriously shaken. The idea of a strategic Bitcoin reserve once seemed like a triumph, but legal and bureaucratic hurdles stalled the plan in the White House. The market, which priced in a victory, is now discounting the disappointment. What was once hope has transformed into an anchor of doubt. In retail, the sentiment shifted from greed to absolute terror. The fear and greed index hit levels we haven't seen in years. Everyday people who bought at the top are now selling in despair. It is the cruel transfer of wealth from the small to the large. The impact on exchanges was immediate and extremely violent. Margin calls forced the sale of billions in futures contracts. In a single Sunday, $2 billion were liquidated instantly. The system entered a mode of financial auto. But why does this matter to those who don't even own crypto? Because Bitcoin is the canary in the coal mine for the economy. It signals when the financial system is running out of breath. If risk dies in Bitcoin, it could die in your retirement fund too. Inflation remains a ghost that haunts the halls of Washington. Fed Warsh will show no mercy in keeping the dollar sovereign. If he must sacrifice crypto to save the currency, how will do it? This is the real politics behind the chart you see bleeding out. Bitcoin miners are also feeling the noose tighten around them. With low prices and high energy costs, the math just doesn't work. Many are turning off their machines and selling their reserves. More selling pressure on a market that already lacks buyers. Where is the support? Where will Bitcoin finally stop its fall? Analysts look at the $60,000 mark with eyes full of suspicion. If that barrier breaks, the abyss could be much, much deeper. Uncertainty is the only certainty we have at this current moment. Global volatility shows no signs of a truce in the short term. Geopolitical tensions force capital to seek real safe havens. Bitcoin, for now, proved to be a risk asset, not a protection asset. The harsh reality of the market ignored the internet hype. We need to talk about the dangerous illusion of infinite growth. Many believed that $200,000 would come without any effort. But the financial market is a master at teaching humility. The current price is the reflection of reality knocking on the door. The new Fed chair is focused on shrinking the balance sheet. This removes the safety net that once protected risky assets. Without the invisible hand injecting liquidity, BTC suffers. It is a return to fundamentals where profit must be real. The tech sector and AI are also competing for the same capital. Many investors migrated from Bitcoin to the promises of AI. The money flow changed direction and Bitcoin was left behind. It is the global capital musical chairs in search of a return.
Have you ever stopped to think that the videos you just watched with flawless scripts and engaging narrations might have been created by someone who never even touched a camera or a microphone? There is a new digital elite profiting heavily behind the scenes of YouTube and social media, building massive channels without ever showing their faces or spending thousands of dollars on equipment. While most people are frozen by the fear of being on camera, these individuals are using the hidden power of artificial intelligence to generate automated content that works and earns for them 24 hours a day. The secret to dominating this game isn't about having a famous face. It's about knowing how to command the right tools to create scripts, voices, and visuals that magnetically hold the audience's attention. I've gained access to a strategic method that reveals the exact roadmap for you to build your own invisible digital empire. Mastering AI to turn clicks into a real source of income. It is the perfect opportunity for those seeking financial and geographical freedom without having to deal with the pressure of being a public figure on the internet. Best of all, you can seize this opportunity right now for a symbolic price. The complete training is under an exclusive promotion, dropping from $97 to just $17. This is your passport to unlocking the knowledge you need to start your professional journey with AI today. Click the first link in the description to secure your spot while this discount is still active.
The American investor is now at a historic crossroads. Hold the position and believe in the long term, or accept the loss. There is no easy answer when the chart is pointing south. Every decision made today will shape your financial reality tomorrow. Regulation, which was seen as something far off, has arrived. New accounting rules force companies to declare their losses. This scares the boards of directors of major corporations. No one wants an asset on the balance sheet that melts 40% in days. The inflation hedge narrative is currently under heavy fire. With gold rising, Bitcoin should have followed the same path. The fact that it fell shows its correlation is with the stock market. Bitcoin behaves today like a leveraged technology stock. Political uncertainty isn't just about the Federal Reserve. Promised government support may be diluted in negotiations. The U.S. Congress is divided on how to treat crypto, and every political debate reflects instantly on the screen price. The supercycle scenario that many predicted has been postponed. Big names in the sector already admit that confidence was wounded. Reclaiming the $120,000 peak will take time and patience. The market is now entering a phase of exhaustion and cleanup. But not all is darkness for those who study market cycles. Bitcoin has died hundreds of times in the newspaper headlines. Every brutal fall in the past served to strengthen the strong. The question is whether the fundamentals have actually changed. Blockchain technology keeps moving forward, indifferent to price. Real-world use and institutional adoption are still in development, but the financial market has no patience for development. It wants returns now, and when it doesn't get them, the retail investor needs education, not empty promises. Understanding macroeconomics is more important than reading charts. Knowing what the Fed plans is the key to surviving 2026. Money does not accept disrespect, and the market has no mercy. We are living through a moment of financial system redefinition. Where does crypto fit on this new global chessboard? The answer is being written with the blood of investors, and the coming weeks will be decisive for Bitcoin's fate. Do not ignore the signals the economy is sending right now. The Bitcoin crash is just one piece of a much larger mosaic. Protect your capital, study the sources, and don't follow the herd. Financial history is written by those who understand the game. Look at the 6-month chart and see the roller coaster ride. The ascent was glorious, but the descent is proving painful. Bitcoin's fundamentals are still there, but the context shifted. The world of 2026 is different from the optimism of 2024. The Federal Reserve holds the remote control for this market. As long as the dollar is the priority, risk assets will suffer. It is a tug-of-war between digital innovation and state power. And for now, the state is pulling the rope with much more force. ETFs were sold as the ultimate salvation for the crypto market, but they also brought the volatility of the traditional market. Bitcoin is now subject to the whims of institutional fund managers. The independence the coin sought has been partially lost. Observe the movement of the whales in blockchain addresses. Many are quietly accumulating while panic reigns supreme. They know the market is driven by cycles of fear and euphoria. The secret is knowing which phase of the cycle we are in now. U.S. fiscal policy also puts pressure on the crypto market. Growing deficits and record public debt create deep distrusts. Bitcoin should be the exit, but liquidity talks louder. With no money in the pocket, no one buys the system's exit. A 40% drop is a bitter reminder of the true nature of risk. Investing is not a linear path of victories and easy profits. It is a test of physical, mental, and financial endurance. Bitcoin is testing the limits of all its enthusiasts right now. The news you read today was prepared months in advance. Warsh's nomination was the trigger, but the powder was dry. The market was just waiting for a reason to take profits, and politics provided the perfect pretext for the correction. Consider the impact on pension funds that stepped into crypto. The pressure to exit these positions is immense at this moment. No one wants to explain a 40% loss to the pensioners. The institutional domino effect may still have new chapters. Bitcoin's security as a network remains unquestionable. But Bitcoin's security as an investment is a different story. Price is what you pay, but value is what you actually get. And today, the price is struggling to find its true value. The global landscape is in a state of constant mutation. Conflicts, government changes, and new tech shape tomorrow. Bitcoin is just a reflection of this widespread instability. Understanding the world is the first step to understanding your portfolio. The fear of missing out was replaced by the fear of losing all. Mass psychology is the most powerful engine in finance. When panic sets in, logic is the first thing to be abandoned. Keep your cool while the market around you loses its mind. Analyze the decisions of the new Treasury Secretary, Scott Bessent. His statements regarding government support are absolutely vital. If the government retreats on pro-crypto promises, the bottom is far. Politics and finance have never been so deeply intertwined. The lessons of 2026 will be etched into the history books. How the world's most valued asset lost half its value, and how the traditional system reclaimed the reins of capital. It is a narrative of power, technology, and human greed. Will Bitcoin return to $120,000? Many still believe so, but the journey will be long and filled with new obstacles. The market needs to clear out excess leverage first. Only then can growth be sustainable and based on reality. Don't be fooled by quick fixes or miraculous investment tips. The moment demands serious, technical, and fundamental analysis. Listen to those who understand macroeconomics and policy. Your financial future is far too important to be ignored. Keep a close eye on the upcoming Federal Reserve meetings. Every comma in their statements can tank or pump the price. In today's world, information is the most valuable asset of all. Be prepared for whatever the chart presents tomorrow. Bitcoin's fall in the US is a sign of difficult times ahead, but it is also an opportunity for those with a real strategy. The difference between success and failure is knowledge. Don't just be a spectator to your own financial ruin. The script for the crash was written clearly for those who saw the rise was too fast and the fall was proportional to the excess. The story of money continues to be written before your eyes, and you are a part of it, whether you like it or not. The darkness of the red chart will pass, like all crises do. But who will survive to see the next bull market begin? Only those who understand the rules of the current game. The economy never sleeps, and investments do not forgive errors. Bitcoin fell 40%, but the conversation about the future just started. What is your opinion on this collapse, and what do you expect from the Fed? Comment below, subscribe to the channel so you don't miss the analysis, and leave a like if this helped you understand the chaos.